Hi, and welcome back to the Business Career College video series. Again, this is Jason Watt, and in this video, we're going to look at employment insurance. Now, there is a lot to know about employment insurance. We're going to try and just parse it down to the stuff that's most likely to be tested, the stuff you have to know really from a financial planning perspective. So, employment insurance, first off, is a contributory program in which both the employer and employee contribute. Sorry, that's employee. So when the employee contributes at a rate of 1.88%. So they have to contribute 1.88% of their income, and the employer contributes 1.4 times that. So the employee's maximum contribution for 2014 is just a shot over $900. That's about $914. The employer's maximum contribution for 2014 is right around $1,280, just a shot under $1,280. That corresponds roughly to, or that corresponds exactly, I should say, to $48,600 of annual salary. So basically, once you're over $48,600, then contributions to EI stop. When the employer contributes to EI, that generates a tax deduction. That's a tax deductible expense for the employer. And when the employee contributes, that generates a tax credit. And as we've seen with other benefits, when you have that tax advantage at the front end, that means at the back end that all benefits are taxable. Now, in order to generate most types of EI income, we're looking at a minimum number of insured hours. And this varies quite a bit, actually, and it varies from region to region depending on the economic climate in that region. We're typically looking at between 500 to 700 insured hours, and there is some discrepancy there depending on the exact circumstance, but for the most part, to use an EI benefit, you have to meet that minimum number of insured hours requirement. And one other area that's a little bit complicated with EI potentially is EI for self-employed. So a self-employed person, and this includes a business owner or their family when that family collectively owns more than 40% or more of the business, then EI contributions are optional. And that means that that family would have to, or that owner would have to opt in to EI. And we're going to look at the benefits in a moment, but self-employed people cannot ever use the unemployment benefit. They can use sickness and parental and maternity leave benefits and compassionate care benefits, but they can never use the unemployment benefits. So presently the EI maximum, and it does change every quarter, I apologize. The EI maximum is just over $500. It's $517 a week to a maximum of 55% of your normal income. So EI will never replace more than 55% of your income, and they will never pay more than that $517 or whatever it is at the relevant time, $517 a week of your earned income. And of course, that $517 would be taxable. Now, EI is going to have a 2-week waiting period. And for the most part, we're looking at a 15-week benefit period, although there are a fair number of exceptions to that. And we'll see those right away. So what are the benefits that EI can pay out, or under what circumstances will EI pay a benefit? Well, there are quite a few. So we have unemployment or job loss, and at least on paper, this is a job lost through no fault of your own, so laid off, or your employer goes out of business, or you're terminated, whatever it happens to be. And this is the normal 2 weeks and 15 weeks, so 2 weeks wait and 15 weeks of benefits, pays a taxable benefit based on that 517 a week, very straightforward. We have sickness benefits as well. This is the one that's most likely to be tested on most financial services exams. Sickness benefits also have a 2-week waiting period, also provide 15 weeks of benefits. This does include accident benefits. And there's no requirement that this sickness or accident is attributable to work. It simply is that you have something wrong that prevents you from working. So in order to use sickness benefits, you have to have a doctor's note as well, indicating that you can't work, as well as an expected return to work. And we might have parental benefits and maternity benefits. Now, maternity benefits use the 2-week and 15 weeks that we're used to. Parental benefits, this is up to 35 weeks of benefits. This normally follows on the heels of a maternity benefit, which is a total of 50 weeks, which most people are accustomed to. And you can use parental benefits. You can split them between parents, or you can use them in the case of an adoption. You can't use maternity benefits in the case of an adoption. And the final benefit that we have to be aware of is the compassionate care benefit. And it provides up to 6 weeks of benefits. It's actually pretty tough to claim. You have to have a loved one where a doctor says that person is expected to die within the next year. Now, whatever benefit you do get, there is a withholding tax on any EI benefit. So you're not actually going to get as much as $517. You're going to get something less than that based on your tax rate at the time you start collecting benefits. And with unemployment benefits, only with unemployment benefits, there is a clawback possible if you earn too much income in the year. So if you have a high-paying job, you get laid off, and then you spend a period of time unemployed, and then return to the workforce, again in a high-paying job, you can have a clawback of those EI benefits. One other note about EI, and this is important if you're going through an insurance course, is that if you have some sort of group short-term disability plan or weekly indemnity plan, if it's better or equal to EI, that is 2 weeks of benefits and would replace at least 55% of income, if you have this group short-term disability in place, you qualify for the EI premium reduction program, which actually allows you to reduce the employer portion instead of then 1.4 times. It uses a different calculation. It's currently sitting at 1.27 times, but that amount can change. So this allows you to have a slightly reduced EI premium, and then what you have to do is you have to share that premium reduction with your employees. So there are some fairly complex mechanisms by which we give that back to our employees, because the employees don't get a break on their premiums, only the employer does. So to make this fair, we have to share that proportionally back with the employees. So as much as there's a lot more to potentially know about EI, for the sake of most financial services exams, this is really the stuff that you have to be aware of. You have to know that it's relatively easy to claim. It's not going to pay a huge amount of money. It pays in relatively short time, and it doesn't pay for a very long period of time. I hope that helps. That's employment insurance, and I hope you enjoy your ongoing studies. Thank you very kindly.